All right, everyone, this is Matt Lengel again with Denver Private Wealth Management. This is going to be the first video in a series of videos that aims at demystifying private investments. Now, we found that a lot of people may have heard the term of private investing or private equity, but they don't actually know exactly what it means or how to access it or exactly who it's for. And so the point of this video series, and this is coupled with an article series we have on the same topic, is to demystify these private investments so that we can understand how they operate, where they fit inside of your portfolio, and who they're for. So, to start, what exactly is the private marketplace? Well, I think to better understand the private marketplace, it's easier to start with understanding what the public marketplace is. Now, we've all heard that we can invest in companies such as Facebook, Amazon, Apple, Netflix, Google, just to name a few. These are large, mature companies that are worth billions of dollars, and because of that, you can invest in these companies via the public stock exchange, or they issue public debt. And so this is a way for these companies to access capital where they can then take, huge sums of money from investors and use it towards growing their business. But what about companies that you've never heard of? What about your local mom and pop shop or local auto dealer? These companies also need capital to expand their business or sell their business or buy another business, but they don't have as clear of a way of accessing it. And while it may be as simple as smaller businesses like your mom and pop grocery store, there's also a large breadth of privately held companies that are very mainstream, and you may not have even realized it. Companies such as Fidelity Investments or Bass Pro Shops, Staples, McKinsey and Company, just to name a few. So while we say private and you may think of smaller businesses, there's very large mature businesses out there that are not on the public stock exchanges. So how do they access capital? And that's where the private marketplace comes into play. So understand the private marketplace, we first want to understand that there's a bunch of different asset classes that make up the private investment universe, such as private credit, infrastructure, real estate, and private equity, just to name a few. We find that a lot of people think of private equity, the term private equity, and think that they're speaking of the overall private market universe. But as a reminder, the word equity, private equity, is interchangeable for stock. So just as if you invest in stock or owning a piece or a portion of equity in a public company, private equity is the same thing. It'd be about owning a piece of a privately held company. The other ones, such as private credit, think about bonds, but more on the private side rather than the public side. Real estate, just like there's publicly traded real estate, there's also private real estate and infrastructure. One more thing before we dive into these in a later series I want to touch on is when it comes to whatever you're trying to achieve in your portfolio, so whether it be capital growth and appreciation or stable income, there is a private asset class that is able to meet your needs. Whether that be sub-asset classes of direct lending or opportunistic real estate, buyout funds, etc. Whatever you're looking for, there is a private asset class to solve that problem for you. Now, in terms of gaining a better understanding of what the potential return characteristics are of public versus private marketplace, I'm going to take you to the slide where the secondary chart and to the left represents the private marketplace. So private equity, private buyout funds, real estate, private debt, etc. You'll notice has delivered historically, strong double-digit returns over the last 5, 10, 20 years. On the public side, we've seen that there's been a great run-up lately in the S&P 500 of over 10% over the last 10 years, while over the last 5 and 20 years, it's a little closer to, to 5, 6%. Now, historically, I will say the S&P 500 has delivered since 1930s, closer to a 10% clip, but it's worth noting, the strong return characteristics of the private marketplace versus some of the other public investments available to you. Additionally, I want to bring to your attention that the chart here on the bottom is going to represent the drawdown during Q1 of 2020. So when the COVID scare happened and there's huge sell-offs, because of the more illiquid nature of private investing, there was a much smaller drawdown, you'll notice, during Q1 of 2020 compared to public investments, where it's a lot easier to have panic sell-offs. Please stay tuned as we continue to dive into topics on each asset class and how they perform, along with who these investments are for, and see where the private market universe is going in future years as we continue to dive into this topic. Thank you.